Why does your lender need your whole life story just to give you a loan? Do they need your blood type? Do they need your childhood diary? While I'm at it, why don't I just send them my 5th grade report card too? Here, take everything. Let me explain. Now, as a lender, I know it certainly feels like we are asking for a lot of paperwork, and in some cases we are. But the reason why we're doing this is to actually protect you first and foremost. We want to make sure that you have enough income, you have enough assets to actually afford this home. Now, you also have to remember on the other side of it, we are working with investors, we're working with our company to lend you money against a home. Now, we also have to make sure that you're able to qualify and able to pay that debt back. Now, the 3 main things that lenders are looking at are going to be your assets as number 1. Now, this is exactly what it sounds like, how much money you have, either in liquid form, in stocks, bonds, etc. Now, we need to make sure that you have enough to cover your down payment. If there is a down payment, you need to have enough in there for reserves. If something were to happen to you, that you have enough to pay that debt back. So those are your assets. Now remember, assets can be either liquid, they can be tied up, or they can be in real estate, or they could be in personal property. So those all qualify as assets. Now the second piece that you want to look at is going to be your income. So income's very straightforward, how much you make on a yearly or monthly basis. Now we do have clients that are self-employed, we have clients that are W-2 wage earners, and we have now clients that work specifically in the gig economy. So there's all different ways that we can derive income. So again, very straightforward, but we have to, as a lender, make sure that you have enough income coming in to pay the debt on a monthly basis. So income, very straightforward. And number 3 is going to be your liabilities. Now liabilities also go along with your credit report. Now we need to make sure that you have enough in the income to pay those debts on a monthly basis. So when we look at the liabilities, that's what's going out on a monthly basis. If you think about your credit cards, any installment debt, student loans, anything like that, that will be in the liabilities section. Now, again, we also need to make sure that you are paying those on time, that there is no open collections, that you don't have any derogatory credit. Those are things that we're looking for as a lender. And quite honestly, that's going to be showing up in your credit report and the credit score, just your worthiness on paying that debt back. Those are the 3 main things that we're looking for as a lender to put your loan together. We don't guess, we document. The reason why we do this is because, again, in looking at documentation, we want to make sure that this is actually viable from employer, from a banking institution, and from a credit reporting agency. Now, when we look at this, we make sure that these are dialed in, and this is proper documentation. In a day and age that we have technology that can actually create falsified documents, if you think way back to 2008 when we had a real financial crisis, we really want to make sure that we are documenting this. And again, ultimately, it is to protect you first and foremost, to make sure that you can afford this house and afford this payment. Now, as the lender, it also helps us because when we do send these loans to the investors, or if we keep them in-house, we feel comfortable that you are able to pay that debt back. So this has to be verified. Pro tip, this is where the rubber really meets the road. Now, on a pre-approval, sometimes lenders can actually pre-approve you based upon your verbal documentation, meaning that you tell them how much you make, what your credit score is, and how much your assets are. Now, this does not do you any favors when you actually go into contract. And this is one of the reasons why offers don't get accepted, is because the lender hasn't done the full verification process, meaning that that pre-approval is all based upon verbal documentation. Now, again, remember, it's all about you as a consumer. We want to make sure that you actually qualify, we don't put you in a bad spot, and you can live in a home that you can truly afford. Something that most people don't know is going to be that lenders are typically just the middlemen. So what they do is they make sure on the investor side that we vet you as the consumer, that you can actually afford this. And again, documentation is going to be king and the gold standard when it comes to verifying income, assets, and credit worthiness. Now remember, we don't lend the money. I don't have a stockpile of money here that will actually lend to you. We go to investors that will actually invest into you. So we really want to make sure that we are presenting you in the right fashion, that you can afford this home. All in all, this is exactly what it sounds like. It is a paperwork party. Now, at the end of this party, you actually get the keys to your new home and everyone lives happily ever after. Now, the reason why we do this is truly to make sure that dreams come true, and we do it in a really healthy and right way for you as a consumer. Now, I've been doing this for 20 plus years, have a lot of passion on helping people get into the home of their dreams. So if you have any questions, please leave a comment, always reach out. I'm always here to help out and really guide you home. So thanks for watching, and we'll catch you on the next one.